Good morning everybody and welcome to this Smart Charts European session. Hope you are all well, ready for another update in how we are trading the financial markets this week. And it's been an interesting week so far with some really good opportunities, with some wins, with some losses, with good reward to risk trades. And really it was all based around the theme of the US dollar, looking for the continuations on the faster time frames, but being aware of potential reversals because we are quite overstretched, and it's the reversal trades that have worked out quite nicely. But we'll get an update of the positions on what we've been trading through these European and Asia session webinars. But first, let's see what's the main focus for today. Okay, so first of all, it's all about the Swiss National Bank, who is expected to cut interest rates 25 basis points from 1.25% to 1.0%. But markets are pricing in a 50% chance of a bigger than expected interest rate cut of 50 basis points, just like the Fed surprised the market last week. Now, the central bank, the Swiss National Bank, has been vocal about wanting a weaker Swiss franc, but if they go too big too soon, then there's no room to help the economy in the future. There has been speculation that the bank has already intervened in its currency last month to curb the Swiss franc strength, so traders will be looking for confirmation on that intervention and if that could potentially happen again. And the cut could be supportive of pound Swiss and Aussie Swiss towards the upside, according to investment bank Goldman Sachs. Now, we know interest rate policy has a big impact on the direction of currency pairs. Reason for that, simply because of interest rate differential strategies being done by institutional money market fund managers, where they borrow money in low interest rate countries and they go and park that money into high interest rate countries. So it has a big impact on the flows of the currency market as everyone's moving their money around between different countries. So what we have here is a Swiss National Bank forecasting to cut interest rates, but we have the Bank of England who have kept rates on hold and who are only likely to have maybe one more interest rate cut later in the year. We've had the Reserve Bank of Australia keep interest rates on hold as well. So this is why we've had a lot of strength in the pound, a lot of strength in the Aussie, and there's some good trading opportunities around those. And this is why we've had a lot of weakness in the US dollar, which has been cutting interest rates, and the Swiss franc as well. Actually, yesterday was a really good day for the Swiss franc. If you're building out your watch list, your fast time frame watch list, you probably would have had a lot of Swiss franc pairs on your watch list with Aussie Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Canadian Swiss, all getting above their intraday moving averages for some upside. So we may have already had a bit of movement regarding this news announcement before it's even come out. But again, we're not trying to guess what the market will do and how it will respond or what the announcement will be. There's different reasons why we look at these economic announcements. First of all, risk management. Okay, if you're a trend trader and you're using scaling in strategies, then you might have built up a few positions on the Swiss franc. So of course, as we get closer to the news announcement, we want to think about profit taking, not having too much exposure to the Swiss franc. So that's the first thing. Risk management, always the most important. And the second thing is that we want to look for any surprises. Okay, we know that already most news announcements are already priced in. Okay, because these analysts who are forecasting all these things, they do that ahead of time, so their institutional desks have time to build positions to capitalize on those themes. So if there's any big surprises, then everyone's got to readjust their portfolio. It can create a lot of volatility. Sometimes that volatility is just too much to trade. It's all whipsawy and choppy, and that's fine. But then sometimes we get some really nice follow through as everyone's readjusting their positions, and we get some very high probability trends, which of course where we want to be trading. And the third reason is that if you're more of a longer term trader and you're holding trades for a longer period of time, then of course you need more reasons on why the market will travel in that direction for a longer period of time. So your fundamental narrative can give you the reasoning. So when your technicals and fundamentals line up, it can lead to some of those longer term trading opportunities. All right. So let's see what the announcement is and how the market will respond. If there are any trading opportunities around it, I'll do my best to update you in these webinars, but make sure you're tuning into all the live trading webinars all throughout the day from London and Sydney, so then you too can also capitalize on those trading opportunities with the live traders as well. For now, let's dive into smart charts. Let's see what's been going on there. Okay, first of all, let's get a quick update. So we started off the beginning of the week with the Euro New Zealand trade to the downside, where price came back into this moving average zone and we had these really large volatile cycles, but it came into the zone here, the yellow line to the blue line. It held in the zone. It actually broke through the zone, and we've been looking for that, that continuation, that move there. Similar to this here, where price got below the moving average zone, it held in the zone, and we got a nice little run. That was the first trade there, and we said, okay, we'll probably target in this low point here. So managed to squeeze out, 1.8 reward to risk, close to a 2-to-1 reward to risk on that trade. Not quite a 2-to-1 though. So that was good, but now we're out of that. We then also had a few positional trades, didn't we? So we had a positional trade on Euro against the Canadian, where we were looking for price to really bounce off this this zone of angle of price here on this trend line. So a bit volatile there yesterday, that's fine. So we had a losing trade, but we only risked 1% on it rather than our 2% allocation like we did on Euro New Zealand, because in this instance we said we've got a big zone here of trend lines, so we want to give it a bit of room just in case we need to take another trade again, okay, if the volatility is a bit high around the Canadian dollar. So fine, that got stopped out, but we would reduced our risk there, okay. So in this instance, if you're banking like 4%, if you're risking 2% per trade, if you're banking 4% on a high reward to risk trade, 2-to-1 like Euro Kiwi, and then you have, you lose 1% on a trade like this, then you'll still net up, okay. This is why we try to go for the high reward to risk if it's available, all right. If it's available, sometimes it's not there. We also had a trade on US dollar against the Japanese yen, and I think that was on the power pivot strategy. So let's have a look. Yeah, so we had that dollar yen trade here, and we said, okay, look, price coming into this area, sellers have turned up here before, so we'll look for that continuation in the dollar, all right. So that was a losing trade there, all right. But then we had another good trade on dollar yen, because this is very key. If you're trading in the right place, of the market condition, and the market maybe triggers you into a move, but it doesn't continue and it turns around and stops you out and you have a losing trade, that is telling you, or should be telling you, a huge amount of very valuable information, all right? Because in this instance, we were looking for these daily chart sellers to continue to move as they had been turning up here before. What happened? Some sellers turned up, but then no one actually turned up to continue to move. It broke the trend line, it broke the moving average zone. What does that tell us? There's no more sellers in the market. We know we've also been keeping an eye out on potential reversals in the US dollar because they're quite overstretched. We'll continue the trend, but we're looking for reversals. That's been the big theme for this week. So we had a nice chance of a re-entry here, because actually what you'll see on the 4-hour chart on the power pivot strategy is that we broke the trend line, and what happened? We retested that trend line, and actually we had this nice cycle formation on the way up now. On the intraday chart, it broke through the daily levels, and now it gave us this nice setup with these nice little double bottom patterns here on this moving average where buyers have turned up before. So we've got multiple sort of confluence of support areas here, and we had this trade here, which we highlighted in the Asia session yesterday. So that was good, and that was a 3-to-1 reward to risk. So already just probably maybe got to your target, maybe not got to your target, depending on where you got in. So that's already a 3-to-1 reward to risk. So that can already help cover 2 losing trades, and you still net up, right? So in this instance, those balance of wins and losses doesn't really make a difference, okay? Because we are adjusting our risk according to what the market is telling us to do. You're lowering the risk when we're doing positional setups, okay, trading ranges and so on, but then also trying to find those high reward to risk trades if they're available, okay. And it's a combination of that risk and portfolio management which is so key. So then your net up there, let's say 2%, you're 6% there, and then of course you'll still net up 1% from the wins and losses from before. And then we also had a losing trade there on the market breakout strategy on pound Oz. We were looking for price to break out here, and again it just all fizzled out actually. But again, it was a positional trade, right? So we didn't risk the full 2%, we risked just 1%, all right? So now, okay, your 6% goes down to 5%, so that's fine. And then we had some really good trades there yesterday on the reversal of the US dollar. Most particularly the euro US dollar. We had some really good reversal trades there, because on the vol reversal, if you were trading intraday, we had this double top pattern here, this down arrow which smart charts found for us, but it was happening at a price level, this significant daily high point. This was, a multi-year high point, okay, the high of the year actually. And we had a double top pattern here, didn't we? You can see the down arrow. So we just had the same, really just the same repeated pattern of behavior here. So again, that was pretty decent as well, and that helps to boost your boost some of your returns. So again, combinations of wins and losses, combination of different risk management, portfolio management, different reward to risk, but we're all just listening to what the market is telling us to do. That's the absolute key, all right? So what is going to be the focus of today? Well, first of all, you can see how useful it is to trade multiple time frames, okay? And this is where, using AI technology, algorithmic technology becomes very important. So we have to click on all the currency pairs in the list, analyze everything. Already does a bit of work for us, and it's that combination of what technology is doing and a bit of human real-time insight and pattern recognition is very powerful. It actually helps you to cover a lot more ground. We can look at multiple asset classes, time frames, and be in the opportunity flow, right? Which is obviously very useful, as you've seen so far, this week. And these are just a handful of things, okay, mainly on the medium to high time frames. This is not even including all the fast time frame stuff that's been developing this week on 20 bounces, pip runners, breakfast breakouts. All the fast time stuff has been really great this week as well, with the volatility that we've been seeing. Now, what are we looking at today? Well, if we go back to this daily chart on the phase changer, something that's been highlighted from the London and Sydney trading floors, euro against the Australian dollar, because we've had some nice weakness here. We're dealing with some low volatility cycles, but we have been bouncing off this yellow moving average, and we are coming into this yellow moving average again, an area where sellers have turned up before, at an angular price where sellers have turned up here before, and we're looking for price to get below this low point and continue to move lower back down to these areas here, okay? And we know this fits into the trend that has been developing here to the downside, fits into the fundamental narrative that we have been seeing with the European Central Bank cutting rates, but the Reserve Bank of Australia keeping rates on hold. So there is a bit of that strength and weakness there to work with, all right? We can also see, if you go to your tools tab, and I've got a customized setting here on the currency strength, you can already see that actually overnight in the Asia session, the Aussie is pretty strong, all right? The euro is creeping higher, but not as strong as the Aussie. So that obviously is telling you that the euro is weaker than the Aussie. If we get that sort of trend continuing, then that could become quite interesting, all right? So on top of identifying the opportunity, Smart Charts helps us to do that, confirms that as well with the currency strength indicator as well, which is really useful. It also helps with the risk management work. So by clicking the sell icon, Smart Charts will populate an entry price of the blue dot, stop loss of the red dot, target the green dot. These can all be adjusted according to your own user preferences, of course. You can adjust the risk management accordingly if you need to. And then we like to set an expiry of a current bar close, and then simply decline or accept the trade at the bottom, all right? The target level is really around the low points. Maybe if it does go, then maybe there's a chance to squeeze out a few more pips, just a little bit lower. So we'll keep an eye out on that if the trend does continue, all right? Now, there's plenty of other trading opportunities already setting up and are likely to set up throughout the day. So make sure you are tuning into all the other live training webinars throughout the day, especially try to catch some of those intraday fast time frame movements, okay? But in the meantime, that's it from me. Thanks for tuning in. All the best for your trading. I'll see you next time.